Thank you for tuning in to our podcast, From the Darkhorse's Mouth. Today's episode is Flight Risk. It's making the move from the captive to the independent world. And joining us today is, of course, our co-pilot, Carly.
Hello.
And we also have Jeremy Besse. He's the owner of Optimal Insurance AZ. And he's actually walking in your shoes as we speak. So thanks for joining us, and I'd like to start by, why don't you just give us a little bit of your background? I know that you had started off as a captive and you had made the transition to the independent world, so why don't you just give us a little background of that journey, what it was like, some of the things that you've encountered?
Yeah, so thanks for having me. It's this is, I think, year 19 in the industry.
Wow.
15 years. We banged it out with Farmers Insurance. That's how we came to know each other, and always admired the path that you were on, the path that you took. I would say probably 10, 12 years ago, I was looking at the independent channel myself as an option to capture more customers. And I got comfortable in the warm blanket of income and residual income and the fruits of the labor that had already been harvested, and decided 2021 that enough was enough. And here we are, 2.5, almost 3 years later, just getting after it.
Wow. So I guess I didn't realize that you've been in the business for 19 years.
I don't know how that happened.
Yeah,
I kind of blacked out.
Yeah.
I think you always
You just
black
put your
out.
head down.
Yeah, especially when you're living in that captive bubble for a while. So you had said something interesting, because 19 years, but 2.5 years in the independent world sounded like after 12 years you started thinking about, hey, this world that I'm in, this captive world that I'm in, isn't for me long term. And so that 3-year delta, I'm trying to do the math here. What were some of the things holding you back from the time you started thinking that you wanted to make the move until you actually effectively made it?
A lot of it was Kool-Aid, true Kool-Aid from the captive providers. The district managers are very good with their words. And also you have to have the thought process of, you've built your agency to a certain point. If you input the same energy into your existing agency as you would a new agency, could I be that much further ahead? And that notion, plus the residual income, plus having a new wife and aspirations of a family and other things, the timing just didn't, I wasn't pushed out of the nest per se by my desire for risk and reward.
Yeah, got it. And I remember, when I was going through the same process, you'd hit on one of the things that I always thought of, because when you're looking to make the move and it takes time to actually get there, there's these little fear buttons that hold you back, right?
Sure.
And one of mine was, number one is, can I do this? And if I do this, how long is it going to take me to offset the money that I have saved, like basically operate before my money runs out?
Yeah.
And I think that one of the things that I thought about, which you just mentioned, was effectively your marketing system, right? So in the captive world, you've got your marketing system, and I don't know how many quotes, or if you remember how many quotes or what your marketing system looked like then, but I always thought, like, okay, so if I take the same level of effort, I knew my close ratio. Like, do you remember what your close ratio was in the captive world?
I wasn't that huge of a numbers guy.
Yeah.
Still kind of have a question mark there, but yeah, it's something that I'm learning to dive deeper into as I have a little bit more time.
Yeah. So I always looked at, okay, if I take, like, let's just say I'm doing 100 quotes, we'll just use the number 100. And if I'm taking 100 in my close ratio, and I've got one option, right, with Farmers, or at the time, you've effectively got one option. And my close ratio is, 15, 20%. And I take that same level of effort and I take it out of this plug and I push it over here to where I've got, 5 plugs or 5 options or 10 options, wherever they may be. Same level of effort, but now I've got an increased close ratio. an increased retention ratio because I can move people around.
Yep.
And so I think that was one of the things that at least gave me some type of certainty or security that, okay, this can be done if I.
Oh, 100%. You put pen on paper and you start using math, it works out in your favor coming this direction. It really is just it's the motivating factor of getting out of the nest. I mean, that's where the true fear from a captive agent sits right now is how much longer can I continue to do what I'm doing before I quit or have a heart attack?
Yeah.
Yeah.
I mean, I think half of the industry right now is operating with a partial heart attack 24/7. And then you just have to have that motivating factor of, okay, I can do this. I'm doing it now. I am winning. My best year at Farmers was 2021, the same year I left.
Yeah.
I didn't ring the bell, say, hey, I quit. 6 months later, just coast for 6 months. I ground it and ran and just kept grinding until the very last 2 weeks. I was on hold with the customer service center for 3 hours. And I'm like, why am I on hold 2 weeks before the close of my business to take care of this issue? But I still had the commitment. But I had that motivating factor in May of 2021. And I remember sitting in San Diego on vacation with my Excel spreadsheet, my laptop, figuring out close ratios, figuring out my 5-year plan on projections and expenses. And when I looked at the numbers, I recently went back 2 months ago, looked at it again and said, I'm doing better than projected.
That's great, isn't it?
That's awesome.
And to see that not only can your vision come true, but you do also have to understand the last 2.5 years, I've gotten a lot grayer, maybe a little heavier. Cardiologist doesn't want to see me right now, but I might want to see him, depending on the underwriting rules. But it really comes down to, in 2017, I completed an Ironman triathlon.
Oh, wow.
Right on. Congrats.
So my why for that was I had back surgery in 2014. The doctor said I wouldn't run again.
Oh.
So I said, okay, well, I can swim and I can bike. Let's figure out if I can, huff it out for the last marathon of a triathlon. But the dedication was there. I always had the fire. I still live as though I have a gun to my head every day, as us straight commission people are. Mm-hmm. And if you're willing to put it in and grind it out for the big three, I don't know if we're allowed to name names here, but if you're going to grind it out for Big Blue or copycat Big Blue, I mean, they're both kind of copying each other's moves right now.
Yeah.
All the farms. If you're going to do it for the farms, do it for yourself and bet the farm and just know that your efforts with the right planning and the right grit behind it, it's a no-brainer.
Yeah. So how much time would you say? Because obviously, you start thinking about it in after 12 years, and then there's from the time you start thinking about it to the time you actually did it in 2021, when you're on top. And there's like thinking about it, and then there's like, okay, planning, which you're talking about the metrics, and you're talking about all the things that you're doing. Like how much planning did you do before you were like, okay, I feel confident with a pretty high degree of certainty that I can do this?
Yeah, I'd say it's a good 6 months of time that you're going to want to commit to really looking at yourself in the mirror. Like, I firmly believe in having the biggest mirror that you can have in your office behind your desk. Just so if you're having a moment like that, you can turn around and look and see who's the person to blame.
Yeah.
That's good advice.
It's not anybody else in this industry. It's you, and it starts and stops with you. Carriers do what they do, but you know better. 6 months. I mean, my motivating factor happened, and it was a definite divine intervention moment where God said, this is not your course. This is not where you're going to be. So we're going to close that door and not let you proceed through it. And thank God that he did, because I think I would be buried if I was able to do what I wanted to do. I think I would have still been buried.
Yeah. Wow.
So once that happened, made my phone calls, did my numbers, and really it was, okay, the calendar year clicked over January 31st, 2022, 2022 came, signed the contract the next day, and off to the running I went.
There you go. So talk to us a little bit about, so obviously, step one is I have to get to a place to where, I'm ready to go and I'm making those calls. And then it's like, okay, now I'm standing here and I got nothing. and now I'm starting over.
Yeah.
So walk us through kind of that starting over point of like, okay, I made the move and now I have to execute on my plan. And like, what does that look like for you?
You have to figure out how you can get out of your existing agency, either turning it back to the company, taking your one time and going. Some companies don't even give you anything. You just put your notice in and you're gone. Have a nice day. Just really depends where you're coming from, but knowing how to get out is probably step number one.
Right.
I think knowing marketing and planning for how you're going to run your new agency is the cart that stays behind the horse. But knowing how to get out definitely is step number one. And then realizing, okay, this is, this income that you're receiving, once you do check out, it's gone. You're on your own. And be willing to accept that. I mean, if you're listening, watching right now, and you're sitting there banging your head on your desk, wondering how you're going to continue this pace, you really got to figure out where you want to be in life. Mm-hmm. If you've got 5 years left in your career, is this too late of a switch? No, hell no. If you've got 10, 15, 20 more years to put into this, you have a plan for children or relatives to take over down the road, this is the decision is yours ultimately. But knowing that you're stepping out, accepting the terms of that, this whole 7 stages of recovery, recovery, grief. I mean, you're in a situation now where you've incurred the last 3 years of the hardest times of the industry.
Right.
This is the biggest punch that we've gotten.
That's another thing I wanted to point out too is not only have you done it and are doing it, but you're doing it in what's probably the worst or toughest insurance market in 30 plus years. I mean, you've been in the business 19 years. I think I'm 20 maybe. And we remember, I think when I got into it was just after, 01, 02, 03 when they did the changes in the credit scoring, I think was a big problem. And then, of course, you've got the financial downturn of 2008. But this has really been unprecedented.
Yeah.
And so I guess one of the things I want to, just point out or acknowledge is that, you're doing it and living it in the worst insurance market in history.
Yeah, I did
and
not.
You're doing it.
That was not on the spreadsheet when I'm sitting in San Diego typing things up. I did not put on the business plan and worst market in the history of the markets.
But the fact is that you're doing it.
Yeah.
Right.
And you're thriving.
Yeah.
Mm-hmm.
Right. And in doing it and thriving, obviously it takes a lot of work. I love your analogy of the triathlon and doing that. And if I had to do a triathlon, I'd die in the swimming part.
You would totally die.
I hired a coach.
Yeah, I don't even know if a coach would do me any good. I think I'd have to, it'd be like I was at Lake Pleasant on a boat where I'm in a life preserver, doggy paddling my way through that thing. But very, very, very commendable, and I think it's the reason I just want to spend a little bit of time on it is because if you've got the right mindset and you do the proper planning, and of course you're willing to do the work and do whatever it takes. Even in the worst insurance market, you can still have success.
Yeah, you have to be willing to put in the work. You have to look in the mirror and look at your spouse, and your spouse has to be on board or your marriage will not endure. It's not fun starting over again. If you want to buy an agency, you still have to get to know your customers. You still got to get to know the systems and the carriers and all of that, especially right now with carriers non-renewing and moving off of risk. But yeah, you have to have a committed partner. God bless my wife. I don't know if I could do the same thing for her that she's done for me for the last 30 some odd months, but it's you have to have full awareness of what you're getting into again. It's not something to scare somebody away. It's just you need to be truthful with yourself Like right now, if you're running an agency and you're there from 9 till 2:30 and your staff does most of your quoting, if you're bringing your staff with you, fantastic. If you're not, get engaged.
Get ready.
Get engaged again, because from 7 to 7, Monday through Friday and some Saturdays, it starts and stops with me in the office, and it has.
Yeah. Did you ever consider or try to buy an agency rather than start basically from scratch?
I couldn't find any that were available that were in my price range at the time. So
yeah, it's tough when we one of the things, I call this like it would be a great shortcut.
Yeah,
right.
Sure.
To have revenue coming in.
Sure.
And I think when we had made the move, we did call on 400 or so agencies, found 26 that were interested, and 4 or 5 were viable, and ultimately they're all very different. You talk about knowing your customers and whatnot.
Yeah, you have to be very careful with that, because you can get sucked into a non-standard market, a cash-only kind of an agency that's very geographically centered, and you disrupt the pool water, and all of a sudden it's you don't know which way it's going, and you're trying to learn the systems and learn the databases and learn the carriers, and some carriers want quotas, some carriers don't want quotas. You just gotta buyer beware.
Yeah, for sure. One of the so we talked. Well, actually, before I get to that, so you had mentioned the actual leaving piece, which oftentimes there's a couple of different options, and you had mentioned 2 of them. You can kind of give your book back to the company potentially, or the other one is oftentimes you can sell it to someone else.
Yep.
And what's your view on one versus the other? Like, from your point of view, did you look at it and say, hey, it would be better to sell to someone else, or did you look at it and say it'd be better just to give it back to the company?
I think if I was sitting in the viewer listener's shoes right now, I'd probably go with the option A of selling it back to the company and walking and take your money and run kind of a deal. I sold it private party to an agent that was with moved here from out of state, that was with one of the farms, not farmers, because obviously, but no, he gave me 2x. I gave him 2 years of time.
Yeah.
So that was the fair exchange rate.
Yeah. So and the reason I ask is because I went through that same process myself, and it was basically the difference between on my terms or on their terms.
Yeah.
Because when I looked at it, and of course, there's a pretty stark difference in value between the two, at least front end value, short term value, right?
Sure.
Because I looked at it one way. I'm like, okay, if I go the more money route and sell to someone else, like, now I'm on their timeline, and there's a whole list that you got another owner involved. There's a whole list of other stuff that you have to worry about, especially if this owner's buying your book of business, and after your non-solicit's up, there's any opportunity to potentially take some of that business back. Well, now there's someone that you're taking it from that brought it, which is another set of liability that you have to consider.
Yep.
Right. Versus if you give it back to the company, typically the strings that are attached that are a lot less, which allows you to move quicker. You don't get the front end monetary value up front, but you do get more flexibility.
100%. Yeah, that was where the consideration 2 for 2. 2 years time, 2 years of money. And that was his task. The task of the guy who bought my agency, that was his task. Get to know my customers, get to know who they are, connect with them. I sent out a letter that was co-signed. I sat at my home office and filled almost 600 envelopes with hand-signed goodbye letters, basically, and an intro for him, so that there would be a soft passover.
Yeah.
To say, hey, this is the guy that I vetted. This is the guy that I chose to represent you as your agent. Here's his information. Appreciate your business and Godspeed, kind of a deal. And the consensus after my 2-year agreement was up was he's never called me once.
Yeah.
So do I have any ethical issues in going back after my customers again? No.
Yeah, I wouldn't either. I'm a firm believer in, hey, you signed the agreement, adhere to the agreement.
Yep.
I remember when I was doing my same due diligence when I was in your position. Of course, I like anyone would. I took my agreement to an attorney and said, "Hey, what do you think of this?" And his comments was, "Well, it's so old that it's probably not enforceable, and you're probably good." And I said, "You know what? I agreed to a year. Mine was a year non-solicit, and I'm going to adhere to it." And that's the backstory to ask you. A related question is, did you build that into when you were doing your metrics, did you build in, hey, I think I can take back a portion of this client base, or was that
100%.
just? Yeah.
The thought process was always there for February 1st of 24. It was okay. Once that clicks over, what factor am I going to see? Now, am I actively, aggressively going after that book of business? No, I don't want to bankrupt the guy.
Yeah.
I mean, it's from the feedback that I get, plus what the company has done to the customers over the last 2 years. It's fish in a barrel, to be honest.
Yeah.
It's fish in a barrel for pretty much any company over the last 2 years. If you can come back out and give them the great service that you gave them before, and you can look at your carriers for them. Mm-hmm. But then again, also, I sent out 600 letters, and I went back through my list again to see who I wanted back. And it's a shorter list. It's a much shorter list, which is a great position to be in. And that's the position that you will be in when you make the switch. Is you don't have to. You're not thinking that you're walking away from 600 people and you're going to get all of them back. Mm-hmm. It's never going to happen. I think maximum maybe 25%. I think would be a good number to kind of base your mind on.
Yeah, that was going to be my next question is, did you take back as much as you anticipated you would as part of your original plan?
The first month of the non-compete being over, I don't think I slept. I sent out enough automation solicitations to them that we were overran with people wanting to come back because they just haven't received the loving experience that we provided to them,
right?
Plus the increases, plus the non-renewals, plus the plus. I mean,
right.
It is what it is.
So the adverse insurance market in some capacity worked for you in that regards because they only had one option, right?
100%.
And option number 2, the timing sounded like it was probably pretty good because it lined up when your non-compete or non-solicit was.
Yeah, the market works great in both ways. I mean, it's terrible for some of them, but also some of them have customers that are very loyal to brands and will stay with them even though the premiums are exponentially higher. But from our side, I mean, this market and remarketing, I know that'll be a different topic for a different podcast, but the remarketing side of things is a blessing and a curse at the same time. Mm-hmm. So, but still would rather have 15 options versus one.
Yeah. Yeah, absolutely. Who wouldn't, right? So we've talked a lot about the risk part of it and kind of the fear that goes into it and the planning and things like that. Let's talk a little bit about, and I know you're still kind of into it and building it, but let's talk a little bit about the reward aspect. Like, what are some of the things that I know you said that you're doing better than you thought, but what are some of the things that you're like, wow, this is night and day difference, and I wouldn't have this over here, and I'm starting. Maybe you're seeing the reward right now, or you're starting to see the reward. Like, what's that look like for you now?
So there's one monumental difference on this side versus on the captive market is there's a word that you get to hear a lot more. And that's yes. It's yes. You get to hear the word yes. I don't know about any psychologist in America or the world that wouldn't agree that hearing yes is better than hearing no. That's a reward in and of itself. Being in a position to where now we're 30, we'll call it 31 months into this. Now I have a full-time account manager, a part-time account manager, a salesperson, and 2 independent contractors in the agency at Farmer. Well, there it is, Farmers.
Yeah. You can say it. It's okay.
It's all right.
Being able to scale was tied to their plan. Mm-hmm. This is our plans.
Right.
Mm-hmm. God has his own plans for how the direction of the agency goes and where we end up and how we end up. We were talking off podcast about a client that we received off of a random Google find. And when you're set to be in a position, the doors will open. Now, risk, the reward part of it, yeah, it's a stark difference between best year at Farmers versus best year current, and I can tell you every year going forward is going to be a new best year.
Yeah.
So whereas the treadmill at Big Blue was more of how much can I continue to grind for the same result.
Right. Right.
There'll be a lot of agents that are going to say, no, we're doing great, we're growing exponentially. I don't know if they know exponentially.
Well, it's certainly a different. I mean, you can't generate the type of revenue in the captive world that you can independent, and the even small differences, like in the captive world, typically it's like, so what's my marketing territory, right? I like to compare it to, is it my backyard? Is it my area code, zip code, state, United States, right? As an independent agent, it's as big as you want it to be, and you don't have to go through an approval process to get there.
Yeah.
So the adoption's higher.
Correct.
You can someone before where you're like, yeah, I can only help you in Arizona. I mean, this is big in the we do a lot in the mortgage and real estate world, and in the mortgage world, they don't write loans in just one state.
Mm-hmm.
They write them in 20 states, and so previous, you're captive, you've got one option in one state.
Yep.
There's not a high enough success rate there for you to get enough traction, get enough adoption to continue to blow that thing out of the water.
Yeah, 100%. I mean, that's obviously right now with the limitations depending on different setups, obviously, and different organizations to join. But yeah, you still have to be responsible to the Department of Insurances and the ability to write with those carriers in those states. But yeah, you don't have to put it through any chain of command. You got to go get your license and then talk to the carrier reps and figure out what's the next step.
Right. And so the you just went over kind of what your staff looks like today, which is impressive.
Yeah.
What did that staff look like in your best year when you left with Farmers?
I had a service person.
Okay, so you and a service person.
One CSR. We're still cranking it for that.
That's after, was that 12 years, 15 years at Farmers?
Yeah, I think I had I think at peak time I may have had 2 salespeople and a service person working for us. And I don't know if it was fiscally, continuable at the pace that we were going at when we were doing it.
Yeah.
So
have you broken even yet on your Farmers book, like what you ended with? Are you past that yet as a
revenue wise?
Yeah, revenue and premium wise.
Yeah, this year will be premium wise. So 31 months later, we're about 55% bigger than I was when I sold.
Yeah, it's incredible, isn't it?
Congrats.
Yeah,
that's awesome.
It's been pretty crazy. And income wise, we almost passed it last year.
Okay.
And this year we're about 80% more than last year.
Yeah, and then the market's going to shift.
Yeah.
Finally.
And then
you put keep putting all the pieces in place that you need to, and you'll continue to just knock it out of the park.
That's what I keep hearing from some people that are in my life that are like, you're doing this in this market, dude. Like I keep wanting to run faster and harder and keep redlining it. And she's like, when are you sleeping? Like what's the forecast? Like I said, my wife is a saint. I don't want to continue on this path. I want to replace myself, of course. And that's my commitment to her, is to eventually enjoy the fruits of the labor versus just laboring. I guess it's a 15-year problem with the past mentality, but no, it's again, and that leads into the question about remarketing. Remarketing is a blessing and a curse. The curse is the labor. The blessing is your revenues stay at new business levels.
Right.
So you're not taking that 33-40% decrease on renewal because you're consistently, if you're consistently doing it, which is not the goal. But in this time where carriers are leaving and doubling and pulling all sorts of tricks, it's a pretty amazing figure.
Well, plus the other thing is, another distinction is, and this is one of the things I noticed when I had made the move is, in the captive world, you're there to serve them. In the independent world, they're really there to serve you, because you've got so many options. So a lot of them are coming in, and you're not seeing it as much today because of the current marketplace.
Yeah.
But when things are good, prior to when you started and when we got into it,
Yeah.
they're competing against each other to who can offer you the best deal, so to speak.
Yeah, absolutely. And it was evident in, I think, month 2, the Safeco rep came out to my house. And he was like, hey, he asked me on the phone, he was like, do you drink bourbon, whiskey, vodka? What's your drink? I said, I don't know. I think maybe like wine right now because I get a little crazy on the bourbon stuff.
There you go.
Not to say that I don't drink it, but I said Pinot Noir. So he came out to my house and brought me a bottle of wine and said, hey, thanks for the business. You're actually doing exactly what your business plan said.
Yeah.
And I said, do you know how many bottles of wine I got from my district manager at Farmers in 15 years of lining pockets?
Yeah.
0.
Uh-oh. Hope he's not listening.
0.
Just kidding.
I hope he's taking notes.
Yeah.
There you go.
Yeah,
I hope he's taking
yeah.
notes.
Take notes, buddy.
Yeah.
It's the same thing for the customer appreciation. Same thing with your agents. If you show appreciation, you're going to get an even better result.
Right.
And through this market with that carrier, it's been difficult at times, but when we have those honest conversations that are full of information and honesty, I said it twice now, they, like you said, they want you to write business with them versus them telling you to write business.
Yeah.
And it's a total paradigm shift on the relationship of what you think and what you are experiencing to what this is. And it's still surreal to see how green the grass is on this side of the fence.
Yeah, and the other thing too, and you alluded to it before, is you had that commercial opportunity that had come to you through
Google.
Sound like Google.
Google.
That sounds like by accident is what I was going to say.
Yeah,
I was like,
Google.
by accident. All of a sudden this huge opportunity, but you get that opportunity, and in the captive world, like you can't do anything with it.
Yeah.
For the most part, I don't think.
Yeah. Some carriers are still tied to.
Yeah.
They still shut down their agents from writing outside with the E&S or the non-admitted markets, but
even if they do, and I'm a little bit far removed from kind of the evolution of that, but even if they do, there's still a set of criteria, and
Yep.
there's still hoops to jump through.
Very much so.
And I don't even know if you, in that capacity, if you're what the ownership structure or what the value of that translates into, as it relates to your book of business. I think it's a fraction of, if it does exist, of what it is in the, of course, in the independent world.
Yeah, for sure.
That's awesome. So a couple more questions. One question is, from a timeline perspective, there's, of course, you talk about the current marketplace. A lot of agents have been in your shoes. A lot of them are thinking about it. A lot of time passes, a lot of doubt, a lot of that type of stuff. Are you of the mind of there's no time like the present? Or are you more of like how would you you talk about life insurance, right? They're like, it's never cheaper, it's never better than the day that you buy it, right?
Yeah.
So if you're looking like, okay, I'm going to make this move in consideration of the way the market is right now versus, so you have the experience right now, right? So you've already made the move. So you've experienced the worst insurance market in 30 years while you're doing it, you're living it. But then you have people here. Is it, what's scarier, staying after having the experience? Is it scary to stay where you're at in the captive world or make the leap and deal with the worst insurance market in 30 years?
Honestly, right now, I think most of the captive markets are wondering what's next.
Yeah.
What shoe's dropping next on them? Commission cuts, rejection of desire, their appetite. I know one of the carriers just changed their home underwriting to no claims in 7 years.
Oh my God.
Wow.
They've all made the shift openly. All the marketing reps are saying we want to go back into the auto market.
Mm-hmm.
Homes are still just a headwind, but if you're sitting on the sidelines wondering, it depends on how long you've been wondering. If you've ridden it out because you started to think about it during COVID times, and you're like, maybe. You wrote it out and you've continued to write out. Now we're in the fourth quarter. Now the holidays are going to be an excuse. And then January is going to come, and all of a sudden you're thinking about taxes and Valentine's Day and summer vacations and birthdays and any possible excuse for not jumping. It's just you're waiting for the next thing to drop, when you're waiting for your next commission cut to come in, your next regulation hit to come in as far as what you can and cannot write. So yeah, right now I think if you're at that point and you're prepared and you've done your due diligence, you're listening, you're tuning in, you're doing the right homework, there's really, it's just fear, a fear of the unknown. You know, FOMO is coming in to say, no, they're just going to rob you of your joy. But, you know, if you're willing to rededicate it, you've got the resources, you've got the grit, you can, you know, put your pants on and tighten the belt down and really fundamentally have a solid backing and basis with your wife or your husband or whomever. You know, you have to have those ducks in a row more so than even your finances or your marketing plan, because, you know, you don't want to be going through a divorce and a restart at the same time. Like that's,
Sounds awful.
It's not for the weak. I mean,
I think I went through some version of that actually.
don't. Fear of the unknown is I don't know. If you're waiting for somebody else to tell you to do it, do it. I'll tell you right now. I'll just say it. Do it. Jump out. Like, you have the knowledge. You're not starting back at square zero. You know what you're talking about. You know auto insurance. You know home insurance. You have, you know, friends. You've got family. You've got networks. Things that are intangible that you're bringing with you. You've got all of it. Just jump.
That's awesome.
Right.
So then that was great. And then so what's the second to last question? What's the future look like for Optimal Insurance AZ?
Just trying to follow you, man.
Yeah.
trying to scale. My mission now is to scale and to pull myself out of the equation. I want to start to spend time with my 6-year-old daughter, which somehow she's gotten to be 6. And that was one of my fear factors. Just so you know, full disclaimer, when I left, I had a 2.5-year-old daughter and a wife that stayed home. So I knew the hat that I was wearing, but no, I want to scale. I want to try and rinse and repeat on salespeople and bring in and keep the same level of service. You know, my ultimate desired role would be the chief quality control officer.
Yeah.
Yeah.
I want to walk in and pull files for people, for different salespeople on a Friday with a envelope of $100 bills in my pocket, and call a customer and say, hey, how did Dan do?
Yeah.
How's your experience been? How has your account manager been? Fantastic. Well, here's your $100. Here's $100. And that's my quality control goal. You know, I want to have 15, 20, 30 people working for me, and just taking it to that level where I know that it can be.
Yeah, that's awesome. So then what's your, as it relates to scaling, because that's what the future looks like.
Yeah.
What are I guess 1 to 3 of the challenges that you're facing right now as it relates to being able to scale?
Finding the people.
Find the people.
I've got the dream.
Yeah.
I've got the vision. We're building the training manual. We're building the systems in place to then rinse and repeat. But it's really just finding people that are willing to bet on themselves.
Yeah. Yeah.
Because that's the end of the day. I mean, you can go get a salary anywhere.
Mm-hmm.
But if you're willing to bet on yourself and to build into this, you're never going to have 100% of the commission that us agents and the owners have, but you're never going to have 100% of the risk.
Right.
So bringing somebody in who's qualified and who's ready to just bang the phones and grind for a bit. It's not instant, but that's number one. You know, learning how to be a good manager.
Yeah.
Number 2. I mean, a lot of captives don't have the experience of scaling. Learning how to do it is 2, and then 3, the financing.
Yeah,
being able to afford them.
Yeah, staffing, management, and financing. So that's a great segue into our future episodes. Tried to structure it like Netflix, when you got that cliffhanger at the end.
Yeah.
Good job.
Great job. So to close us up, I gave you a little heads up, and so we like to close every episode out with kind of like an Ask Me Anything type deal. And so I don't know if you gave it any thought and you have anything to any questions or whatever to ask me, but I wanted to give you the opportunity to do so.
I don't know, man. I think I've kind of stalked and lurked in the background, and I came across. I think I saw you on a cover of a magazine or something.
Yeah, it was Forbes.
Yeah, that's it. Yeah.
I wasn't quite on the cover. I'm not that cool yet, but give me a little bit of time.
There was was it like the Insurance Journal? Were you on?
There was Fortune and there was Forbes. Maybe the Insurance Journal. There is the Insurance Journal too.
Yeah.
I think that's where I saw a picture. I was like, oh, son of a gun!
Look at this guy. Look at that, paying dividends.
Look at this guy. No,
paying dividends.
And I bumped into you at the Big Eye conference and talked to Jim, one of your team members.
Yeah, Jim Dorley.
Super good guy.
Yeah.
Super. I couldn't have been pictured a better fit for him after his past employer, for sure. But it's an exciting time to be, to watch Darkhorse and watch what the Darkhorse does, and it's. I think for you, I mean, question-wise, it's hard to put somebody on the spot and just say, "Here, ask me a question." I know I've had a minute to think about it, but still, it's like, no, man. I think it's just a matter of watching and seeing, and I think we talked about this too personally before. I never envisioned $100 million agencies with insurance agencies. Never thought about it. Never even knew they existed. And I was at a carrier meeting with some other people, and I asked, what's the average size of your agencies that you're clustered that they were affiliated with? And they're saying $2 million to $30 million of revenue. And I was like, sorry, say that again?
Did you say the R word? Revenue? Sure you didn't say premium?
Wait, hang on. So I was like, okay, you're telling me that your average is about $2 to $3 million of revenue. So you're talking $20 million books.
Yeah.
I couldn't tell you more than probably 3 agents at Farmers that had $20 million books.
Yeah, if that.
And this is an entire group of agents that are 75, 80 agents that have books equal or greater than. Mm-hmm. So, no, I just continue to lurk for people that are doing it.
Yeah.
And then and try to pick and repeat, rinse and repeat. The R&D, rip off and duplicate.
That's for sure. Well, lurk away. You're more than welcome to. You have any questions in the future? I'd like to help you as much as possible. The evolution into commercial would be a good spot.
Yeah, for sure.
When you get there. So.
Well, you got a good co-pilot here to keep you on task.
Here I am. I know, and there's a common theme between both of you that I kept hearing repeatedly is dedication, grit, whatever it takes, believe in yourself. So with those things and knowing that that's the change you want to make, there are options out there to move ahead. You just have to buy into yourself.
Yeah, you got to bet fully on yourself. You're doing it right now.
Right, exactly.
You're betting that you're going to outdo the company that's going to change their rules tomorrow. No, you need to outdo it for yourself.
Bet on yourself.
Bet on yourself and run.
Take the leap.
This shirt says "Bet the dark horse." Use your own your own inner dark horse. Bet your inner dark horse and bet big.
Yeah, that's right.
This has been a great opportunity to hopefully help people make the decision to make the leap, and I appreciate your opportunity. I know that you've always exuded to be a man of integrity and real transparency for anybody. I mean, I came and visited you when I was 6 years into the agency and saw you on some tracker, and I was like, holy cow, what's this guy doing? He's in my backyard. And you took me in and said, this is basically where we're at. This is how our operation's running. So, it says volumes when you're still doing it, you're successful doing it, you're leading people doing it. The real deal. So appreciate the opportunity.
Yeah, I really appreciate the acknowledgement and the kind words. And it's certainly been great having you here and hearing your story firsthand. I think that a lot of, our listeners and followers will really benefit from hearing your story. So we appreciate you being here.
Yeah, thank you.
And thank you for tuning in to our podcast, From the Darkhorse's Mouth. You can learn about us at darkhorseinsurance.com.
And follow us on Facebook, Instagram, or LinkedIn at Darkhorse Insurance Brokers, and send any questions to podcast@darkhorseinsurance.com. Thank you.